Hello, welcome everybody. Thanks for joining us tonight, I guess, probably where you're at, me too. It's about 5 o'clock in the evening where I'm located. Welcome to this live webinar for the NetPicks Premier Trader University. This is Mark Silberman, and glad you can make it with us today for this webinar on 15-minute-a-day Forex trading like you're on vacation, and you'll see what we mean by that as we move through the presentation. I'm also joined today by Troy Noonan. So Troy, if you're out there, let me know.
I'm out here. Hello, everybody.
Welcome, welcome. Looking forward to talking about some Forex, Troy.
Yeah, always. My favorite subjects these days.
Good deal. Yeah, lots of great movement. I was kind of a little blown away a bit about the JPY crosses again today, jetting up to the upside once again. So
yeah.
Again, this is Mark Silberman with the NetPicks Premier Trader University. You're going to be hearing from Troy Noonan as well here in a little bit when we go live to the charts. Brian Short is working in the background, so he's going to be manning your questions. This is interactive. I encourage you to ask questions anytime, and he'll be answering those live, as well as we'll do QA in the end. All right, so let's go ahead and get this started. We like to move through these at a good pace. I do put this up first just because we are talking trading, we are talking risk, we are talking performance numbers, and we always expect that all of you understand that there is risk in trading. It's important to understand that, important to look at your situation and make sure that this is something that's for you. So let's just make sure that we all understand that. I'm sure everybody does. Nothing new in that area. What we're going to be talking about today is what does trading like you're on vacation mean? I wanted to kind of explain that to you. And really, it's spending the least amount of time, but at the same time, maximizing your profit potential. Kind of like about 2/3 of you that said, hey, I want 2 out of 3 winners, and I wanted to be right in the middle of profits. It's very similar. It's us trying to spend the least amount of time, but still picking up those consistent profits. We'll be doing a live demo of the Premier Trader University trading strategies within the Forex markets. And we're going to show you how you can join and enroll in the Premier Trader University so you can do the exact same thing really starting next week. So the schedule is actually very favorable for all of you joining us today. We don't need to spend a lot of time in this just because we had about 40% new. We've been around forever in this industry. We're very established. We were founded back in 1996. We're really now in our 17th year. I keep telling myself I need to update that. But we're now in our 17th year overall. We've trained thousands of traders just like yourself from around the world, 105 countries and counting at this point. The entire staff here is in the markets, and we all trade live. And perhaps maybe even more interesting is the team also is made up of all former customers, so all the coaches who join NetPicks and the Premier Trader University and support everything and host our live educational rooms and respond to you when you have a question. Actually, all were originally sitting in your seat, whether it was a year ago or 5 years ago or whatever the case may be. And most of our coaches here have multi-year tenure overall. So you've got a very experienced faculty, definitely knows what it takes to succeed in trading, absolutely can relate to everything you guys have been through and understands the path that you take from starting at trading and the adventure towards profitability. So the question I have for you is, what if you could get the results like you see below in your Forex account in 2013? Would that make a huge difference in your bottom line? And I'm assuming, and I have a feeling for most of you, if not all of you joining us today, and I know I've got traders from around the world in this webinar, the answer would probably be a big yes, affirmative. These would be amazing results for most people, probably everybody watching. Well, these are the results that we had with our PTU, one of our strategies that you'll learn, the PTU Trend Jumper, using just daily bars and just swing trading. So without all the stress and the hassle and the work, not having to do any day trading, and you can see very significant performance numbers last year. So when we start to move along in the presentation, Troy's going to show you what's been happening lately here in 2013 and sort of show you if this picture has gotten better, stayed the same, maybe gone down. So we've got a pretty compelling story to tell you. But this is what's in store for you if you get through the education, learn the systems, and do what you really hopefully will do, is deploy this in your everyday trading. So with Forex swing trading, we really have two styles. The first I call just your classic swing trading off of the daily charts, what I just sort of talked about. Huge benefits are you only need to check the market once every 24 hours. I mean, think about that compared to what you might be doing right now. If you're currently day trading or currently checking the charts all day and all night, I mean, ask yourself how much of a difference in your lifestyle would that lead if you really could just come in once a day instead, once every 24 hours, and check the charts and do everything you need to do. And then what I always say is walk away. Easy to trade multiple currency pairs, very simple to scale, meaning you can break it down to minis, to micros. You have lots of flexibility. And even more important, and Troy's going to show you this, you have the ability to capitalize on the big moves with add-on trades. Because one of the beauties of the daily charts is you don't get a lot of the noise and a lot of the stuff that goes on, the erratic nature of Forex intraday. Several times a year, there are very big swings up and down. And that's when you really want to make your money. So we have ways to capitalize on those big moves. The second way is what I call a hybrid of swing trading. It feels a lot like day trading, but it's not trying to scalp out and barely survive on 5 pips, 6 pips, 8 pips, getting crushed in slippage. I mean, our version of this active swing trading, hybrid swing trading, goes for 50 pips or more. So the nice thing about this style is you get numerous trade opportunities each month in each pair. Basically, every single day, you'll have a setup or two in each currency pair that we track. So that feels in a lot of ways like day trading. But because we're going for the much bigger swings, we're not as susceptible to all that erratic nature of the moves in Forex. You can use some additional leverage because you have very known fixed risk, and we try to minimize that up front. And you absolutely have the ability to trade multiple currency pairs if you want. You certainly don't have to, but you can easily add 2 or 3 pairs into the mix and have no problem following this, especially if you use some of the other things that we teach you. So you don't have to track and trade this all day and all night. You know you don't have to do it with the daily charts, and now I'm telling you, you don't also have to do it with this active swing trading as well. So Forex day trading, why is it flawed? You know, we've been in this business for a long time. Some of you may have seen this slide before. There's a lot of reasons that when we talk to people and they want to day trade, we try to steer them towards futures. When they want to trade Forex, we really do try to steer people towards swing trading. There's a bunch of reasons why. I've put up just some of them on the screen. Probably a lot of you can relate to these. Everything from the lack of centralized trading makes it very difficult to scalp out small profits. There's a lot of issues with execution, stop outs, targets constantly being missed because you're trying to be so tight in with the price action. The spreads end up eating sometimes 30% to 80% of people's targets many times. Platforms get frozen, and when you're trying to grab profit and you're in and out in just a few minutes, so many things can go wrong. Makes day trading Forex very difficult. And I can tell you honestly, with all the people we work with, I know a lot more people, profitable traders who are swing trading than I know who are actively day trading. It doesn't mean it can't happen, but this is a game of percentages. I would rather you be in a place and a style of trading which has a much higher degree of success, and that is absolutely going to be Forex swing trading. Now, another thing that a lot of people worry about is, okay, but if I swing trade, you know, it's not like day trading where I got all these trades and I can trade for income and I can scale and I can add on all these contracts. You can do the exact same thing in Forex swing trading, right? It's not difficult to add a mini, a second mini, and a third mini, a full size, a second full size, a third. As your account grows, all you need to do when you swing trade, just like when you day trade, is increase your position size as your account allows you to increase position size. You don't have to work any harder. You don't have to discover new currency pairs. You don't have to be a swing trader in Forex and suddenly feel like, oh, if my account gets bigger, now I got to start day trading Forex. That's absolutely not the case. There is tremendous scale in Forex. You guys know the global market, it's pretty huge, right? Overall, you're going to be a blip of a blip on the radar. Me too. But that's where you want to be. You don't want to have any influence on price movement. And you want to know that this can grow as far as you want it to grow and as far as you're able to handle and track and trade each day. The huge benefits of swing trading, you know, you already know if you want to day trade, we talk about futures. But the great things about swing trading Forex, it only takes about 5 to 30 minutes per day on average. It may just take a couple minutes. It may take a little longer if you've got multiple setups. Somewhere in that 15-minute average, very, very common. It's not going to take much of your time, and it's going to be less time than 85% of you, according to the poll, are putting in now. You don't need to monitor every tick. One of the hardest things as a trader, even for me, I've been doing this for a long time, is having to watch my trade in real time. And when you day trade, you kind of have to. You really can't walk away for anything, whether it's to go work out, to go have lunch, go to the bathroom, whatever the case may be. It's really difficult to walk away because so much can happen literally in a blink. You can look away from the screen and look back and you could be stopped out. So the really nice thing too about swing trading is the ability to walk away and not have to sweat those up and down moves of the trades. And that drives you crazy. This is going to be a huge relief for you when you trade with this style. You can absolutely trade from anywhere in the world. I would never think to be on vacation and day trade. I've been on vacation many times and actually continued with my swing trades. You don't have to do that, but sometimes I'll have open trades and I'm about to go off on a trip. I don't want to just arbitrarily close them. I know I just need an internet connection, and maybe once a day I just got to check to see if a stop has changed or a target's been hit. I can place a new entry. It's really easy to do. And when I started this business 17 years ago, that was not the case. I can never say that. But these days, with internet and Wi-Fi everywhere, what you want to have is something that's not going to force you to be in some, internet cafe for 2.5 hours, somewhere when you should be on vacation. But give it 5 or 10 minutes, most of us are more than willing to do that. You don't have to guess anymore which currency pair is going to be hot. There's so much predictions of what's going to move the most this year and where all the action is going to be. Because you can trade multiple currency pairs, you don't have to sweat that out. I don't have any idea. I can't tell any of you what's going to be the best performer. I mean, that's total honesty. The people who tell you, oh, this is going to be the year of the EuroCAD, they have no idea. They're never going to be held accountable. We're held accountable because we need our trades to work. We need our trades to profit. We need to make money. You need to make money. So I don't want to get in that guessing game, all right, and flip a coin and decide where it's going to be. There are always a few cautions you have to understand with swing trading. You don't go flat always. There are definitely evenings that you're flat or days that you're flat on certain pairs, but you're going to have open trades typically. So that's why I say don't watch them. Just come in when you're supposed to, do a quick check, and move on. Does also take a little bit of patience. It won't on the hybrid swing trading. No patience needed. But on the daily charts, you'll need some patience sometimes to let these trades kind of work themselves out. How we make swing trading easier, this is why I've got the little vacation picture, right? Because 24-hour-a-day markets are not that manageable unless we do certain concepts that we've been talking about for years. One of them is called Snapshot Trading, and that's not being in the markets from 7 o'clock in the morning to 7 o'clock at night. It's literally coming in the case of the daily bars, once every 24 hours. That's your snapshot. In the case of the hybrid swing trading, maybe it's a couple times every 24 hours. You take a picture of the markets then, and you react to what's on the chart. If there's an open trade, and it's still available to us, we call it getting in sync. If the trade's already hit target or stopped out, you don't worry about it, right? That's part of the snapshot. You don't try to catch every single trade when you're doing the hybrid, the active swing trading. When you're doing the daily bars, you don't really have to worry about it. You're going to catch every single trade. Trade zones, there are certain times a day, and I'm going to show you this when I go live to the charts, that are just more favorable for setups than other time zones. The real key, though, don't stare at your screen. Don't look at it. Place your trade, get in, and walk away. You should be doing a lot more walking away from the screen than you are walking towards the screen. Let's put it that way. And all the Forex swing trades incorporate each of these advantages that you see here. This slide, I just want to remind people, don't get caught in the euro-US dollar trap. I'm not telling you don't trade the euro-US dollar, but to the left and to the right, the left is some average pips per trade in a strategy that we offer. And I just bring this up because I always find it curious where the best performance is coming from. And this is over the last several years. And the top performers, Euro CAD, Euro Aussie, Euro New Zealand, Pound New Zealand, Euro New Zealand, etc. To the right is even recently. And again, it's the same kind of pattern. You absolutely see the Euro US dollar in there. I'm not saying that's not a good market to be in by any means. But one of the beauties of swing trading is you don't have to be as obsessed as you might be now with tiny spreads, right? If you're day trading, you really need those tiny spreads the Euro US offers. But you may very well make a lot more money with some other currency pairs. And if it is 3 pips or 4 pips spread, geez, if you're going for 100 pips and then you're trailing some of these things for 400 pips, 4 pips or 5 pips on a spread really doesn't matter. The other thing I like to show people, and we showed this the other day, if you came to our 2013 predictions, and this is US only, and this is Q4 2012. But I also like to point out to people that sometimes there's this feeling, this assessment out there that, oh, if you trade Forex, maybe you can't be profitable, because there are a lot of things against you. But I look at numbers like this and I go, you know what? Interactive Brokers reports 45% of their accounts in Forex were profitable in Q4 2012. Now, granted, maybe the worst broker, at least as far as traders there, only had 23% profitable. But this doesn't show 5% or 4% or 0%. This shows you that there is a path to profitability. I don't think it doesn't come any surprise to you that most people will never be on the path to profitability, right? I mean, they just won't. But you should be very encouraged by these numbers. I think people read these numbers wrong a lot. They're like, oh, Forex, I mean, look, there's only 35% of the people are profitable. That's pretty damn good, because 9 out of 10 traders, I guarantee you, are coming in with little to no education, with no system, and some of the ones that are getting profitable or short time are just getting lucky. So if you can empower yourself with systems and education, you're going to be in this category. You'll contribute to the percent that are profitable. So what I want to do right now is I want to go to the charts, and I want to talk through a little bit of the strategy. And I'm going to start with what I'm calling, of course, the hybrid approach. And this is the active swing trading. And then I'm going to hand it off to Troy, and he's going to take you through the daily bar version, the bigger moves that we use off the daily. And you really have the opportunity to trade both styles. Sometimes people will ask, well, which should I trade? And my answer to you is always, get exposed and learn both. And you're going to find that you're going to gravitate to one or the other or both. As a trader, one of the huge benefits is you always want to have more choices than you can ever trade in your lifetime, right? You don't want to be faced with a situation where only one market is working and one approach, because markets do cycle, they do change. So you're going to have lots of flexibility, including if your lifestyle changes, you move, your time zone changes. You want that flexibility because you want this to be a skill that you can use for life, not just for short term, not just over the next 90 days. So what you're seeing on the screen here, just to kind of break it down a little bit, I'm going to kind of enlarge this a bit, and we're just going to focus on this one trade here just for the moment. One main indicator that you see down below, and I'll move this a little bit away, this is called our trend power indicator. And I think, as you can see, everything we do is extremely visual, because I'm a believer that a trader cannot have confusion on setups. Everything has to be crystal clear. As a trader myself, I need to know exactly where I'm supposed to get in. I also need to know exactly where I'm supposed to get out, both if things go my way and if things don't go my way. Another thing that I have to know is, besides that, besides knowing, all that, is knowing exactly if a trade is set up and should I cancel a trade. And I want to make sure the odds are in my favor. So the way that we do that, first of all, is we're only going to short when this trend power down below is red. We're only going to buy when it's green. So what's interesting is you can see this market went through a pretty long sideways stretch, right? Do you notice how it fluctuated a little bit from down to up to down? That's exactly what you want to see. And actually, a few times we had some setups. Those little plus signs are setups. And when they're below the price action, those are shorts. And when they're above the price action, those are buys. So one of the best things I want to see is this not triggering a trade. I don't mind if it sets up. I just don't want to see it triggering a lot when the markets get choppy. But what I do want to see is when we start to get the breakout, I do want to see my trade trigger and, of course, hopefully, get the follow through. But when I mention that everything's exact, look what I get on this trade setup on the EuroCAD from today. Bring up the data window here. Point out a few things. The first thing I get is a long entry of 1.3138. That's exact. I get a target 2, which is where I'm going for my profit, at 1.3177. We have some money management that we can kick in, the target 1 that we teach you in the training, and we have our initial protective stop, which can start to be moved up once we get to target 1. So everything is there for you. This is why you could place this trade and walk away. After that, it's up to the market to do what it has to do. I don't need to watch it as this thing triggers and moves up, then moves back down, then moves back up, then back down, back up, and then hits target. You do need to place the trade. That is your responsibility. You need to place it correctly, but there's no reason you won't be able to do that when you have everything crystal clear on the chart. And to give you an idea how this market is done this month, now this is trading a standard size, one standard. We're talking $3,159 this month. Now, you may not be trading a standard. I understand that. Maybe you're trading, 5 minis. Well, you'll be half that. Maybe you're trading 2 minis. You'll be a quarter of that. But this is just one currency pair that you can trade. And we've already had previous webinars where we talked about if you average just $40 a day, you can build up easily to a full-time income with compounding. And Forex will compound for you. So I don't care where you're starting, whether you have a small account, a mid-size, or a large account, you're going to have to, modify the size of your positions. You're not going to start with $300, right, and make $3,000 in January on the EuroCAD. Anybody who tells you that or shows you that, let's face it, they're lying to you. I'm not here to lie to you. I'm here to kind of give you what's realistic and what you can do. This is about building a career, not talking gambling or turning this into, a get-rich-quick. That's not at all what you want to do. But look at this consistency as I start to show you some of the other currency pairs. So here's the pound yen, and sometimes I got to bring these up twice, but it's okay. Almost $3,000 in January on the pound yen. And like I said, not every trade is going to work. You can see if we place this buy, it's going to stop out, though we came right back with a nice buy here today that just hit full target not that long ago this afternoon. Very consistent results overall. If I went to the euro US dollar, pretty solid, $1,500 this month. Finished a buy today, has a new buy that's triggered. Here's a stop out on a short. Some other pairs that we trade, the euro Aussie, another good one. Had a really good month overall so far. We got a little chop today, but doesn't matter. We're still up very solidly, over $2,000. And we're only halfway through the month, by the way. So this is only going to get better as we progress through the month. The euro yen, been a really nice one to trade. Kind of scroll forward here a little bit. You can see we have a really good run going today. This is what we talked about. Over $3,000 here in January, very good in November, and huge in December. Very consistent. We don't win every trade, but every trade is exact. Every trade always has an entry and a target. It's always defined. You're always going to know the rules. We are teaching. This isn't black box. You're going to know exactly why that's a buy, why that's a target, and why that's a stop. But sometimes the question people will ask, just like we're talking about, okay, this is great. I see a lot of setups, though. And I understand. I know I'm going to show you, and Troy's going to show you on the daily charts, how you don't need to worry about a lot of setups. But you may be asking, well, how am I going to take all these trades, given the number of setups? I don't want to be up all day and all night. That's what you promised I wouldn't have to do. Well, I want to show you just on the EuroCAD, if we were to go back just to the beginning of the month and realize that, we're not going to take a lot of the setups because we can't be here 24 hours a day, 5 days a week. Now, we'll talk about probably in the Q&A some automation capabilities that we're going to have that we're releasing this month. That may change that story for you quite a bit. But even if that's not the case, or even if that's something you don't actually do, I want to show you how many trades you actually can take if all you do is come in once every 24 hours, even with this. And I would recommend more than once because this is more of an active swing trade. But let's just say you're somebody who comes in between, and you can be around between 7 and 8 New York time in the morning. And I understand some of you, there's no way. You're more of a 2 to 3 in the morning, New York time, which is, European business hours. That's fine as well. I just want to give you this example so you kind of understand what I'm talking about, snapshot trading and getting in sync. So going back really to the first of the year, this thing initially triggered at noon, this short. Now, we weren't going to be around at noon if I told you we're coming in between 7 and 8. Well, what's neat about this one is I have a new opportunity to take this trade because look how long this stays in the short. It goes all the way into the first, right? All the way into January 2nd. So do you think I could have taken this trade any time over these 2 days and gotten short? Yeah, this is about the easiest one you'll ever see because it went really flat. So catching this first short, all I had to do was come in 7 to 8 on the first. Well, really, you probably didn't work the first, but let's say January 2nd, right in here. And let's see where it is. It's right in here. And take that short, and you get full target. Now, not every trade is going to be caught. This trade here happened at 5:30 in the morning, New York. You might think, I would have missed it. You would not have missed this because at 7 to 8 is from here all the way to about here. So in this area is 7 to 8. Do you think you could place a sell stop and catch this trade with a sell stop at 847? You don't need to be around at 847. You already know everything. You know the entry, you know the target, you know the stop. All you know is that you're going to do something we call get in sync. You're going to get in sync with an open trade. And if the market would have kept going up and would have stopped out, no big deal. Next time you check, just cancel the trade. But in this case, it went back down and you picked up another winning trade. Only being around once every 24 hours. Now here's one that triggered at 12:30 in the afternoon. Of course, we're not going to be around for that short. And it ends up hitting target in the evening. Now, maybe if I would have checked late afternoon or in the evening here about 7 to 8 at night, you know what? I could have caught that one. But even if we just checked once for 24 hours, all right, that's a short trade that I don't get. You know, here's a short trade again at 5:07 in the morning. You might think, again, I'm going to miss it. No, you're not. Because here's at 7 o'clock in the morning. Once again, it pulls back, and you can pick up that trade. And that's again in sync. This is one of the huge advantages of trading this way. Yes, there are a lot of setups, but they're going for big moves, 40, 50, 60 pips, not attempting a day trade. The pound yen, it works the same way. Maybe you're somebody who wants to come in the evening. That's going to be much better for you. You know, sometime between, let's say, 8 and 9 p.m. New York time, which, you know, may be a terrible time if you're in Europe, but you can come in at 2 in the morning, our time anyway in New York, and that could be a perfect time. I went back and I counted the trades in January so far between 8 o'clock and 9 o'clock, 4 winners, 1 loss. I also found, and this is stuff we share with you, that some of the best trades in the pound yen come between 11 o'clock in the morning and 12 o'clock in the afternoon New York time, which is early evening in Europe, right? Could be a perfect time, you know, for you there as well. 5-1 overall. That's not every trade that there was, but pretty damn good results just by being around when the best trades happen. So you actually can be more profitable by not being available 24 hours a day and have the results and everything for you crystal clear on the chart. It's one of the best ways to trade. For me, it was a life changer when it came to trading Forex because I never kind of understood that concept. I would always sweat over missing setups until I started to realize, wait a minute, I can be around just part of the time, get in sync with this. I don't have to catch it the moment this triggers at 5:30. I can come in at 11 o'clock in the morning and just be consistent with it and determine that's a pretty good time to come in on a daily basis and catch most of the trades. And in fact, many times I'll filter out losing trades just by not participating. Troy, I want to hand it over to you because I think it's very compelling on this side, but really exciting on your side with the daily charts. So let me hand it off to you.
Yeah, great. A real good point you make. It's, you know, I remember the day when I would have my laptop next to my bed with alarms, alerts. Every time I'd fall asleep, it seemed like just a few minutes later I got woken up again. And, you know, then you struggle to get a trade. You finally take it, and that trade ends up being a loser and all that work and pain and suffering. And when you finally do catch some sleep, then you miss the trade that would have been the winner. And, I mean, that's just no way to trade.
No, I mean, I've been there so many times. Like you say, it's painful. I mean, this is all about, you know, taking away that pain.
Exactly. And then also it's a realization of why you're trading in the first place. I'm not trading because I want to trade. I'm trading so I don't have to trade, so I don't have to work, so I can just live my life the way I want to for freedom. I mean, that's the whole point of trading. So, I mean, that's a big lesson. With Trend Jumper, this is a strategy that I developed over this last year, and I've been using this with end-of-day charts. I absolutely love this style of trading. You know, it's funny because this is the fifth, you know, how to trade Forex in 15 minutes. Over the first 15 minutes of this webinar, I just placed like 6 or 7 brand new trades, and it was just, and that's it. They're placed. I don't even have to think about it till tomorrow because the bars end every day. So I'll show you some that I placed. There's a couple that exited. There's some that are in process right now, various stages. I like to look at this one because this one's so fresh in my mind. Mark, you flashed some results, and I just got to say they need to be updated because, well, they were about 3,200 pips, but now they're up to 66.59, and that's just over the last, you know, month. Less than
my apologies on that. I missed 3,400 pips.
Yeah, I mean, it doubled literally. Oops, yeah. And you mentioned something that I like to point out, and you really see it with the end-of-day charts, and that is that Forex, you know, it's like a big ocean steamliner. It starts picking up momentum, and it takes a long time to turn around. And you could catch huge moves, you know, 1 to 3 times a year. There's going to be a gigantic move in most pairs. And so what Trend Jumper is going to do, it's going to get you in. It typically gets you in early, like right here on November 19th. But then as the trade is progressing up, it's giving you new setups that you can build a position. You could literally go in, add your position with new defined targets and stops, and really just, make your year basically. I mean, we doubled from 32.14 to 66.59 from November 19th until 2 days ago when this stopped out, these two trades. It's pretty remarkable. And if you can catch moves like that with proper risk management, I mean, you can see the power in that. And what's beautiful about Trend Jumper is that every single trade, and I'll illustrate it. Let me illustrate it with this little setup here. Every single trade is giving you a 2-to-1 risk-reward ratio. So if you get in here at the little plus sign, you're risking this little bit right here between those two lines, and the fixed target is nearly double this space, minus a few pips. And that's just the fixed target. We go in with two positions. This trade here, the same type of thing. You can see the little risk. It even never came down to threaten, but we also move our stop up and take the risk off. Exited here with 156 pips. Doesn't look like much because these are end-of-day charts, but that was just 2 days later. I mean, this trade took me, less than a minute to place, and 2 days later I'm up 156 pips. Because the way Trend Jumper works is it seeks to find immediate support and resistance levels from which to jump off of. And that's basically what we're seeing here. And so it just identifies these sweet spots on the chart. Meanwhile, we're trailing with the dots all the way up, the same position all the way up, finally stopped out a week ago on the 9th of January. And that was good for 989 pips. Now, did this take me any more time? Yeah, I mean, every single day I had to move my stop from here to here, from here to here. The next day from here to here. Yeah, so it did take me about 10 seconds a day. Meanwhile, I had to put in a little time to add to my position, and I had to deal with some FIFO rules, which are a pain in the butt. But that only took a few minutes, and it was worth it. This extra position broke even because of the rules. This extra position, 183 pips to here. Second position trailed up, exited with the other, 709 more pips. Building a position. Got to double down on this one. That's kind of one of those things where you don't have to, but when you get confidence in the strategy, you start seeing the power in this. 179 pips to here, another 703. I mean, by the time I exited right here, that was a lot of money. I was like well over 2,000 pips on the second half of the position, which were already immensely profitable. Meanwhile, I added to my position here. This one didn't go the distance, but it did stop out here. It was good for 101 pips. I was able to pick up another one here, and that one zoomed to 322 pips again in just 2 days. Notice the springing off of the trampoline, jumping straight to the target. You see that, right? Well, not a lot more, no more gas in the tank, but I was able to push my stop up and get 99 more pips on that trailer. That's just a pretty typical Trend Jumper, I should say explosion in profits, which is going to happen 1 to 3 times a year on most pairs. You mentioned, Mark, the Euro US. It definitely has been a laggard in 2012, but maybe a lot of you remember at the end of 2011 how powerful it was. So, it's kind of off and on. You get some profits, you get some losses. This little trade here was the last 2 trades. This one was a loser. It triggered in, didn't get very far, and it stopped out. But look at the small loss compared to what the target was way down here. So now I'm currently in this trade. The stop perfectly placed. It came down, threatened to stop out, stayed in. Will it go higher? Who knows? Will it stop out? It might. But, my target is double what my risk is. And if I just roll back to the end of 2012, 2012 was mostly, a bad year. I marked this up. You can see again the big buildup where you made literally all the money on this one move. This one move was good for Well, 1,126 pips basically. And kind of like the other strategy, the PTU strategy, you're going to get a lot of entries and setups that don't trigger in. Here's an avoided trade, would have been a loss, didn't trigger in. Here's a small loss that you only lost a little bit here. Here's one that didn't trigger in. Another one that didn't trigger in. Those are good. Those are like 3 losing trades that we avoided. So out of 4 bad trades, we only lost on 1 of them. The other 3, we didn't even, they were neutral. And then we got into that. And that one was good for 118 pips, 112 pips, another small loss, and then some big winners again. And, you know, you keep your losses small, you let your profits run, typical trader wisdom, right? Well, the trend jumper gives you all that, puts the odds in your favor, and as long as you trade with smart, reasonable risk, just follow the dots on the chart, and literally, these are end-of-day charts. When the market closes, you come on in. I mean, I had to wait a few minutes today. When our webinar started, I was looking at this Aussie yen setup, and I noticed it was like a 10-pip spread. I'm scratching my head going, what? Yeah, you got to wait just a little bit of time. You know, I looked at it 10 minutes later, and the spread was back to normal. So you do have to be careful right at the open of the market, but, you know, you learn that. And it's really easy. This one also, the euro pound, this one just came off. Now it's trailing. The stop is already locked in. Who knows how far that's going to go? To me, it doesn't matter. It's just another trade. It's already successful, and I'm successful just by following the plan. I mean, there's nothing more to it. That's really what trading's all about anyway. Mark, I mean, we could look at more charts, or I could hand it back to you.
Yeah, that's great. I'll take it back here. Thanks to everybody else. I mean, we always have a very big audience, and I just want to thank you guys for joining us and listening and asking your questions. You know, even if the timing wasn't perfect for you, that's no problem. I hope you got something out of it. And, you know, by all means, come to the next webinars. Get as much free stuff out of us as you can. And so have a good rest of the evening. Great trading if you're in the markets right now. Have a good one.